Okay guys, it's the 26th of May. Now just quickly before we get started on the video, I'm moving house on Friday, so next weekend there will be no videos, and then the weekend after I should get back to normal. So as always, we will start with the E-mini SP 500 and then we'll move on to the E-mini NASDAQ. We'll look at the markets in terms of what they did last week in terms of our Sunday analysis video, and then we'll have a look at the markets for the trading week ahead. In relation to day trading. So S&P, coming into the start of last week, we went over how there was a bit of a price squeeze. If we broke to the upside, very likely we're coming up to test at 2740. If we broke to the downside, very likely we were coming to test at 2710. However, we wanted to be a little bit careful because if we've seen the breaks, this was key resistance, this was key support, there was the potential for false breaks and then finding resistance, or false breaks and then finding support. And it's only if we started to break out of these levels that we would then look for stronger potential movements. So on the Sunday, we were breaking up, coming into the Monday, testing as support, breaking up, testing at our 2740 level for resistance. Then we crashed all the way down to our 2700 level where we found support. Back down to 2710, we found support again, very strong. And then on Friday, we've tried to break up, back up to test at the 2740 level. We failed, and we've crashed back down once again. So similar to how we went over here with this large triangle, that the center point of the triangle moving forward tends to be a good level of potential support and resistance. What do we see? We've broken out of this triangle. Market on the Friday comes back down and it's testing at the center point, and also the Thursday and the Wednesday breaking down and then closing back up above that level. Now it's a very strong, a very small triangle, sorry, so I'm not really paying too much attention to that as we move forward now. So for the S&P, really our zones are still looking pretty good. So up above we still have key resistance at 2747. We could just bring the lower level down ever so slightly to 2738. Let's get rid of this rectangle. This remains key resistance. You know, we've now rejected once, twice, three times at this level. It's an important area on the market. If we break up above there, then sure, it becomes a good level to start looking for a stronger bullish bounce. Potentially back up toward 2760. So if we start getting above this level, at present we are finding strong resistance and we have rejected multiple times. 2730 to 2725. What we've been doing basically is trying to break up from this level and then closing back within it multiple times. So we close back in it once, twice, three times, four times. Also this candle here, 5 times. We've opened here and then we've crashed back down from it. So it still remains a good level of resistance. And if we're breaking up above, it still remains a good level to look for bounces. I want to be a little bit careful. I wouldn't say bounces back up into the previous zone just because we've started to have a few rejections lower than that level, but it still remains good level of resistance. If we're breaking up above, good for potential support. And down below these levels, 2710 to 2707, 2705 to 2700, yeah, both of them are still very key support on this market. And as we went over last week, it's testing at this center point, which is a double bottom. We've had to bounce up, we've tried to break up from this level, and at present we're just testing at it. If we start to fail at these levels now, it remains a good area to watch for the resistance coming in. So similar to what we went over last week, if we're breaking down below the 2700 level, yeah, looking for the potential weakness and the moves down. And now we have 2695 to 2692 as a support level. I would say this is more minor. And if we are breaking down from this level, it's very likely we're coming to test 2680 to 2670. So same sort of analysis as last week, and then this level becomes key support, and down below there 2665 to 2653, key support also. And then breaks down below there, yeah, stronger potential correction on the S&P. Okay guys, so that's everything for this market for this week. So let's move on to the NASDAQ. So for the NASDAQ last week, what we went over were our very key levels. So we had key support down here, again, looking at that strong double bottom using the center point. Up above, we had key resistance at 7,017 to 6,992 right here. And then throughout the week, we've basically just been sort of pressing up and testing at our more minor level at 6955 to 6945. Multiple rejections. 1, 2, we pressed up here. 3 rejections coming in on the Thursday, and then on the Friday we spiked up into that 6992 level, and we found strong rejection coming in. And what I went over with subscribers basically was, although we'd tried to break down here on the Wednesday and failed and had a really strong ramp up, on the Friday the market had pressed up and we're starting to see the rejection coming in. And what we were potentially seeing, and what it has done for the Friday, was the market pressing up above all of these previous spikes here, looking to clear out stops. And very likely with all these spikes, rejection spikes, people have gotten short on this market, set their stops up above the level. We've pressed up here, not quite found the stops, and then on the Friday we've ramped up to clear the stops. We've also ramped up to trigger in breakout traders, and then we find the rejection at our key level and the market crashes back down once again. So coming into next week, again, it's still in the same sort of areas. So this remains very key resistance, 7017, 6992. If we're breaking up above it, again, it's good to watch for potential bullish bounces and the move higher. What I would say is the way the market has reacted last week, if we adjust this one ever so slightly up to here, increase our rectangle, 6964 down to 6946. This is now also a very good level of potential support. I've had multiple spikes here. It's a good level to look for the continued bullish bounces. If we're breaking down below, again, we're switching to resistance. Happy to look for those moves back down to 6927 to 6908, which again is a, I'd say really it's a more minor level. If we're breaking back down once again, it's very likely we're coming back down to previous lows, where we're going to create a nice zone at 6980. Let me just check that. Sorry, 6880 to 6892 right here. If we're breaking down below here, it's very likely we will see the move back down to this level. And then very key support remains 6865 to 6833. Even though we had a false break here, if we're starting to break back down below it, again, I'm happy to look for the resistance, potentially showing us the failure at this key center point from that double bottom. And I'll be looking for the moves down to 6800 to 6768. Again, good support. If we're breaking down below, good resistance, looking for the move back down to 6742 to 6712, which is very key support. Multiple tests down here, showing the buyers stepping in. This is a really good level. Okay, so quick recap for this one. This remains key resistance, breaks above, good to look for the bounces. This remains, or it is good support now with all these spikes. If we're breaking down below, it's opening up the move at least down to 6927, but I'd expect to see again 6890 tested right here, which is potentially good support, breaks down below there. The moves into 6865, which is key support. We've been looking at it a couple of weeks now, breaks down below there, moves towards 6800. I'd be happy to look for once again. This is key support. We're starting to get into strong levels down here, but breaks down below there. Happy to look for the move to 6742, which is very key support on the NASDAQ. Okay guys, that's everything for this week. I hope you have a good trading week next week. I hope you have a good couple of weeks. I'll speak to you after I get the house move out of the way. I'm James Orr, and thank you.